This presentation predominantly talks about what P2P is and why is it important. And the last part of the presentation talks about how we mitigate the risk. Because that's one question that everybody has in mind. So that piece I will try to elaborate a little. What companies like us do to ensure there is enough protection or enough mitigation for the investors who are coming onto the platform. So what is P2P lending? It's basically emerged from sharing economy, and this economy is not a small economy, it's a pretty large economy. This economy started, I think, 20 years back with Yahoo Groups. I don't know how many of you have heard of Yahoo Groups. It basically, shares information, it shares a lot of views. So Facebook, the second generation internet companies, change the dynamics of sharing a little bit more. So you share your pictures, you share your thoughts, your videos, all of that. And today we are seeing the third generation of companies who are sharing stuff and making money out of it.
We are the largest commodity exchange in India, 7th largest in the world, and the main commodities which are traded on MCX are gold, silver, your base metals like copper, nickel, zinc, lead, aluminium. In agri commodities you have cotton, menthol, crude palm oil, जिससे वनस्पति बनता है. Menthol is a very typical example in the Indian context, grown only in 2 districts of UP, Barabanki and 2 places, Barabanki and Chandosi. You go to any farmer in these pockets and you ask them कि menthol का क्या rate है, he would first look at the MCX screen and then quote you a rate. So that is the kind of penetration or benchmarking the online platform in the case of commodities MCX has done with the physical market. Cotton में you would have heard about Vardhmans, Nahars, Goswals of the world. They take price input from MCX and then they decide at what rate they should buy cotton from the physical market. So 26,000 crore single-sided, around 25 lakh clients of MCX. We have a market share of around 90%, 91% to be precise. And the volumes of these commodities are kind of one-third among the precious metals. These markets are generally not for investment. They are for price risk management and price discovery. You do not come to a futures exchange to typically invest because on a futures exchange you have short duration contracts which are traded. It is not a spot market. It is not similar to a cash market which you see in the equity segment. So you come here to either to trade as a speculator or to use this market for your price risk management as a hedger. So hedger, speculator, and there is a third category called an arbitrager who tries to take the price difference between the futures market and the spot market. So generally these are the 3 categories of entities who trade, who use this market.